Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Monday morning pre-market webcast. Okay, daily chart of the ES, and let's talk about this real quick. We made new highs on Friday up at 14.99 quarter, but there's a couple things you got to remember, and it really showed through on Friday. And I'm not picking on anybody. I'm not, but the same thing happens when we make tops every time. There's nothing different about this top. Absolutely nothing different. The same people up on highs, display hubris on Twitter, in rooms, all over, in print, blogs, everywhere about, where we're going and higher numbers and who's buying what and the whole thing. And it's really no different than it is on other highs. We are 100 handles above the 200-day exponential moving average. We are 30 handles above the middle Bollinger Band, and the bands are starting to curl lower now. You can see, as we were headed up here, the bands looked like they were headed to Mars. And what we've seen now is we made highs, the 14.99 quarter, and the bands have bent lower. So what am I looking for? I'm looking for, potentially even another high up in the 1502 to 1504 area, and the potential to punch through those upper bands and then start to head lower. We're extended, and honestly, you cannot be buying up here. I don't care who's buying. I don't care who tells you who's buying. You cannot buy this. We are, if this is your job, if this is your business, if this is how you make your money, you need to be responsible from a risk perspective. And buying the 96s, looking for the 1502s is not responsible. It's not a responsible way to trade your account. If you're scalping, that's one thing, But there are people out there being encouraged to be put into swing trades now, looking for 1520, 1530, 1540, and I don't think that's a responsible way to trade these markets. The risk now is to the upside, that every tick is the last tick, and that we start to head lower. We've been swing short for a while. We've had so many excellent opportunities to take pieces off, for 10 handles or so on days like Thursday when we go up and we peak out at 97 and we go down and we print down in the low 80s. So, it's never fun to be in something like this, but when you can trade in and out of it like that, then and then add back on at higher levels, you're making money while you're getting ready to make the larger move down. And there will be a move down. Find me somewhere on the chart where we haven't hit the middle band. Find me somewhere on the chart where we never went back and hit the lower Bollinger Band. It's going to happen. Lower Bollinger Band's down at 1434.52. And before long, I'll be sitting here on one of these things with you this morning, and we'll be talking about, the market punching the lower Bollinger Band, and this is when you have to start thinking about buying. Okay? We punched the lower Bollinger Band on New Year's Eve. It is January the 28th. It's really not that long. It feels like that long if you're trading these markets with every tick, but it's really not that long. This is what markets do. I think we're going to go higher and make one more punch through the upper band. And if you're not yet short, when that upper band gets punched, I would absolutely go ahead and initiate a swing short position there, looking for the middle band down at 1469 as an initial target. And then if that doesn't hold, that opens up a trade down to the 50-day exponential moving average, which is the red line. A gap fill here. Gap fill here would be around the 1426, 1425 level, and then potentially a move down to the lower band, because that's what markets do. And filter out all that other noise. That's what markets do. They revert to the mean. Okay? The more focused you stay on mean reversion, the better off you're going to be with respect to making swing profits in your account. Okay, that's all I got today. Mike Vacchi, Princetontrader from Mr. Topstep. I will be back tomorrow morning with another webcast. Trade them well, everybody.